Doug, let's talk about what we just heard from Jamie. And I know you didn't hear his soundbite, but what he was talking about when it comes to trade is it does create uncertainty. It's that fear of the unknown that can stop some companies in particular in terms of what they're going to spend CapEx, whether you build a factory somewhere here or there. What have the threat of tariffs meant to you so far, and what have the tariffs that have already been imposed meant to your bottom line?
Well, if we think about two dimensions for Walmart, there's the side where we're building stores and clubs and have an e-commerce investment in China. That continues on. As it relates to how goods flowing out of China come into other markets, including the United States, it creates uncertainty as it relates to pricing. It causes us to start thinking about where we want to source goods from. We buy more merchandise made in the USA here by far than we do anywhere else, but China's second on that list. So we worry about next spring, next summer, next fall, what customers will have to pay if tariffs do escalate.
The tariffs that have come on so far, has it impacted your margins at this point, or how do you deal with it?
So far, we've been able to manage it. We try to go up as little as we can and as late as we can for customers, but there are some categories where over time this will show up.
And your thoughts on where we stand in the progress right now? Most people looked at what happened over the weekend at the G20 as a positive stance, but we still don't know what's going to happen 90 days from now.
Yeah, it's a volatile situation. It's nice to have a little good news coming out of Argentina, but we'll see.
We'll see. Let's talk a little bit about the economy overall, because Walmart is such a huge chunk of the economy. When I covered retail, I remember at that point, Walmart's sales alone were 10% of the total U.S. retail sales. So what you all are seeing is a microcosm of what's happening across the broader economy. What do you see right now in terms of the consumer strength?
Well, it's been a good year. You know, our third quarter results with a 3.4% comp and growing e-commerce by 43% was good. We believe the consumer's in good shape. We hear the news. We have these same concerns that you guys talk about all the time. But as it relates to the consumer, we're in good shape.
I heard from Brian Cornell recently, the Target CEO. He said that the consumer environment right now is the healthiest he's seen in his entire career. You don't sound quite as positive.
It's been a good year. No doubt, as we've said, as we've released results all the way through the year, we've had tailwinds. We've got low gas prices, we had the tax changes. There have been a lot of environmental things this year that have been strong.
But you wouldn't go so far as to say it's the best you've ever seen?
I've done this 30 years. There have been other good years. Walmart's had good years. I can't remember them all.
Yeah,
but this has been a good one.
Walmart does well, I think, when it's being run well run. I think Walmart does well whether the consumer's in a great position or whether the consumer's in a bad position because you offer value. In terms of what might happen with a potential slowdown, would you do anything differently, or would you continue to keep going ahead as it is?
Pretty much run our play, and we've got a lot of work going on to change the company. The company's becoming more digital. We're changing how we work from within to get faster, more nimble, adapting to what's happening in retail. Those plans result in lower costs. We've been lowering prices for customers. We need to keep doing that. We've got to build this e-commerce business in a way where it delights customers all the time. We're improving in many areas as it relates to that. And then kind of the magic of Walmart is how we put it all together. I mean, grocery pickup has been really great for us. We're learning how to do deliveries. There's a lot in front of us in terms of what we control and what we can do, and that's what we're focused on.
Walmart is also the largest private employer in the United States. In fact, I didn't realize this until recently. You're the third largest employer in the world, behind only the Red Army in China and the U.S. federal government. So you've got a pretty good idea of what's happening on the employment picture, too. We're going to get a jobs report tomorrow. What would you say ahead of that in terms of what you're seeing on the jobs picture?
Yeah, wages are continuing to go up. We've raised our wages in the U.S., our starting wage rate, 50% in the last 3 years. That continues to go up market by market. These days, we're looking at cities, we're looking at states and making adjustments where we need to get the talent that we want. But we're not just focused on starting wages and hiring new associates into the business. We've invested in training. We've got 200 training academies across the United States that are teaching people retail skills. They're teaching them soft skills, how to interview, how to coach, things like that. We want to retain people. Our turnover is reducing, and as we implement more technology into the business, give people new tools. We want to have people that are with us for a longer period of time so they know how to use those things. So our strategy is not just related to a starting wage rate, it's related to everything that we do, including education and training.
You all started raising the amount of money that you pay your employees and your associates 3 years ago. You did first. Yeah. Amazon has just come out and announced the same thing this year. Has it gotten harder to find the workers you want as the unemployment rate's gone down and is Amazon has started paying more too, which probably leads to everybody starting to pay more.
Some markets are tougher and some shifts are tougher. But overall, our retention rate's going up, and that's helped us navigate this environment.
What do you see as the future of work? You just described all of the initiatives that you all are taking on, but there's been so much concern out there about AI and automation when it comes to some of these things. Are we going to see fewer jobs for entry-level folks?
Yeah, we just finished a panel, as you know, we were talking about that subject. There's a transition going on, and change is happening inside of, I think, all businesses and across industries. It's certainly happening within Walmart. We're learning how to put automation in place, like floor cleaners that are autonomous, like an industrial Roomba, but it's got a camera on it, and it's looking at the merchandise in the aisles so we know where things are, and it's learning how to communicate with a device that goes up and down the aisle that checks to make sure that things are in the right place, that they're priced right, looking to see if we have inventory above, if it needs to be pulled down, helping us as associates do our jobs better.
Is that going to mean fewer jobs then?
I think over time it will be. There'll be a period of disruption, but with our turnover in retail, we can manage through that. And as I mentioned before, we want to train people, upskill them so that they can learn how to do new things. And as this change is happening now, we've already seen new jobs like personal shoppers emerge. We've got about 30,000 personal shoppers in the United States now that are picking grocery orders in the stores for pickup. One of the most popular things we've got right now is a grocery service where you can order on your mobile app, pick a time slot. If you're on your way home from school with the kids, swing through, we put it in your trunk and you take off. That business has grown a lot, and there are people that now have new jobs creating that order for you, and folks that come out to the car, put it in the trunk for you, talk to you for a few minutes, and that's gone really well. So what I really think will happen is we're going to find new jobs, delivery jobs, jobs related to customer service in the stores. We want to improve the environment in the stores. We want our fresh food presentation to be better. We want our apparel presentation to be better. We'll redirect some of those positions towards that.
Doug, when you and I spoke recently, you told me something that really surprised me and intrigued me. You said that you carry around a list with you of the top 10 retailers over the decades, and you carry it on your phone. What is it, and why do you carry it around?
You're going to make me sound completely paranoid now, but the truth is, after learning from so many people, a little bit from Sam Walton, David Glass, Lee Scott, Mike Duke, and the leaders at Walmart, we know that retailers come and go. Businesses grow and they don't change enough and they decline over time. Retailers do that on a bit of a faster cycle. So we've got a healthy paranoia, always have. If there were a group of Walmart associates around here right now and we asked them the only thing other than our purpose and values that's constant at Walmart is, they would fill in the blank with change. We adapt, we learn from competition, we focus on the customer. We're always changing. And so I carry that around with me, and I see it fairly frequently.
You really do. You're not lying. You showed it to me when I made you call it up.
Yeah. I've got an app that's got the top 10 retailers by decade. This one goes back to 1950. And there are companies on here, TG&Y, EJ Corvette. You see the rise and fall of Sears and others. It's just a reminder that this can happen to us too. Yeah. So part of what I do within the company is try to make a case for change, point to a strategy and a vision for our associates. And we've got great people, and they rally and move and change, and it's happening at an accelerated rate inside the company. I think causing people to rethink what Walmart is as a business, and it's really exciting.